Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Tuesday, April 28th. The first quarter GDP data due on Wednesday will be interesting. The consumer spending portion of the data, which comprises 72% of GDP, will show an increase. The business components will be a disaster. This will leave some analysts suggesting that the typical early signs of recovery and a rebound in consumer spending are very positive. They will also note that final sales, which is GDP excluding the inventory component, will post only a modest decline. Others will suggest that the increases in real personal consumption expenditures in January and February were dead cat bounces off of very weak fourth quarter numbers, and that the extremely poor business component trends suggest that downward momentum continues overall, and the rising unemployment will push consumer spending back down in the months ahead. We are in the latter camp. Real personal consumption expenditures increased in January and February and probably declined in March. It is a stretch to assume that spending is now trending higher. January and February are weak months on a not seasonally adjusted basis, and a bit of strength on a bounce gets exaggerated by the seasonal factors. The business data, meanwhile, are horrible. Business investment in software and equipment is plunging. Commercial real estate is extremely weak, and spending on new structures is likely to decline for several quarters. Our GDP estimate has now been revised lower to a decline of 4% because inventory data were very weak. What this reflects is the extremely weak industrial production data. This shows up in lower inventory levels as some buying picked up. Our GDP forecast is not as low as the consensus forecast because our estimate of the impact of net exports is stronger than in many forecasts. There will be some positive spins on the GDP data, but the outlook is still poor for the economy, especially as credit market conditions remain highly uncertain. I'm Pat O'Hare for Briefing.com. Thanks for listening.